Welcome to Trade Pro. In this video, I'm going to show you a complete Ichimoku cloud trading strategy with simple rules to follow for your entry, stop loss, and your profit target placement. If the Ichimoku cloud has never made sense to you from other things that you've seen online already, this is why. It's because there's a cloud that extends out in front of the price data and a lagging span that sits behind the price data. And when you show the data like this, it's really hard to see where those things land. The only way to really see it easily is by using the bar replay feature or live price data. So I'm going to use the bar replay feature to replay the price data so it actually makes sense when I'm going through the examples. Before I go over all the rules for entering a trade, I'm just going to quickly go over the different components of the Ichimoku. So let's go into the settings here and go through each one just so you know what I'm talking about when I'm explaining the strategy itself. So conversion line in blue here, we have the baseline in yellow, the lagging span in the purple, and which sits 26 periods behind the current candle. Then lead 1 and lead 2 outline the cloud itself. Then we have the plot's background, which is just the background of the cloud. And the cloud sits 26 periods in front of the current candle. Okay, so just to show you the different components of it so it all makes sense when I'm explaining the rules for the strategy. The first rule is, for a short position, you need to see price close below the Ichimoku cloud. For a long trade, price must close above the cloud. The second rule for a short position is that the cloud must be red 26 periods in front of the current candle. So you need to look at the most current color of the cloud at the time that you're going to be looking for an entry. Notice how on this long example, the cloud has not yet shifted green, so all the entry criteria would not be present for this long trade. The next thing you need to make sure of is that the conversion line has crossed below the baseline. So the blue line crossed below the yellow line. This is actually normally the first thing that occurs before any of the other steps. Now you see that this first time that price breaks above the cloud, the conversion line is still not crossed above the baseline, so you could not take that entry even if all other criteria was met. The next time that the price does break above the cloud, you see the conversion line has now crossed above the baseline, so this could potentially be valid given all the other factors are present. The last rule that you need to follow is with the lagging span line. Now, for a short trade, you need to make sure that the lagging span has also crossed below the cloud. In this example, all the criteria is met except for the lagging span is not below the cloud. So let's put this on bar replay feature and we're going to wait until all the criteria is met, and that is when we will enter the trade. So it looks like it's getting closer now. So it actually did cross below the cloud. So let's see when that happened. On this candle right here, and at that same time, we have a red cloud. We have the conversion line below the baseline, and all of our criteria is met. Price is below the cloud. We have the lagging span below the cloud. We have a red cloud to the right side, the most recent cloud, and we have conversion line below the baseline. So this would be our entry candle for a short position. What you can do is set your stop loss just above the cloud and target 2 times your risk. Now let's play it out. And that one was a good one. Now let's go over to a long example and go over the rules again. All right, so let's go over all the rules, but for a long position, and put it on bar replay feature and make sure everything lines up for this trade. So the first thing we're looking for is a close above the cloud. So let's wait for a close above the cloud. So we got to close above the cloud here. The next thing we need to make sure of is that we have the cloud actually signaling a green color. So we want to make sure that on the candle that closes above that we already have a green cloud. So yes, we do already have a green cloud. The next thing we want to see is the conversion line above the baseline. Yes, it is. On this candle close, the conversion line is crossed above the baseline, but one thing's not present. We don't have the lagging span above the cloud, so we need to wait. Okay, so when did all the criteria happen? Now, let's go back a couple candles and see which one. It was not here. Let's go one more candle. So this was the candle close that did it. So this would be our entry for a long position. So enter, stop loss, targeting 2 times your risk. And let's play it out here fast. And the profit target gets hit. Stop still intact. All right, so let's find another example now and go over it. All right, so here is another short example. Let's play it out on the bar replay and go over the rules. So we had a close below, and we do not see a red cloud over here. We do not see the lagging span. The only thing that we have is the close and the conversion line crossed below the baseline. So we're waiting. No entry. We got more closes below. We got a red cloud now, but the conversion line is now actually over the baseline and lagging span is not agreeing. So we're just waiting. Okay, so we got actually a close now where the conversion line is below the baseline and we have a red cloud still, and it looks like the lagging span has just crossed down on this candle. So this is our entry candle right here. So all the criteria has been met. Let's enter our short position, stop just above that cloud, and targeting 2 times the risk. I'm going to play it out fast. All right, so that is the trade for that setup. Now let's go on to another long example. All right, so let's start the bar replay feature here and wait for a candle to close above the cloud. All right, so we got a candle close above. Let's see if the candle or the cloud had flipped to green yet. Looks like it had just flipped to green, and we have conversion line above the baseline, and it looks like our lagging span has just crossed above the cloud itself. So all the criteria is met on this candle closing here. So this is our long candle. Let's take a long position on this candle close, stop going just below there, and then targeting 2 times our risk. And let's let it play out. Speed it up here. And it looks like it was a good one. Let's move on to another short. All right, so in this short example, I want to go over a way that you can save yourself from some losses by using the lagging span to get yourself out of a trade when it starts reversing on you. So I'll show you what I mean. Let's just play it out here. So we got to close below, no entry yet, lagging span's not below, everything else is checked. Now let's just wait for that lagging span. Still not there. Okay, so lagging span, let's go back a couple candles. Looks like it was on that candle there. So that's where we get the entry signal, everything is present. And with this example, the stop is extremely far away, so you can also modify the way that you do this stop, but you're going to have an extremely far away profit target in this instance. So this is where I'm going to show you a method that you can use to save yourself from taking losses that you don't need to take. So let's play it out here. And what I'm going to talk about is the lagging span in relation to the price. So if the lagging span ever goes over the price while you're in a short position, you can exit and save yourself from taking a loss. So at this point, you can start getting worried because now the lagging span has come into contact with the price and actually now come fully above it. This is where you want to start getting worried because you know that now price has likely started to reverse. So you can just take your position and close it at this point instead of letting it go to your stop loss. And it's better to save yourself. Even if price ends up going in your favor afterwards, it's still better to save yourself from the losses that will occur, as I believe this one does end up being a loss. Yeah. So if you get that lagging span and it flips above the price, that's where you want to start thinking about getting out of the trade and saving yourself from taking a loss. Another thing you can do if you don't want to cap your profit target at 2 times your risk is use the baseline to follow the trend and stay in it longer until there's a close back above or a cross of the conversion line back above that baseline. You can also do what I talked about with the lagging span, and if it comes above price, exit the trade that way, but it's up to you. Those are just some ideas that you can implement. All right, so here's another long example. Let's start the bar replay. So we're just waiting for a close above. So we got that close, but none of the criteria is really present other than the conversion line crossed above the baseline, but we don't have the green cloud. We don't have the lagging span above the cloud, so we're just waiting. All right, so now we have quite a few pieces of criteria being present. So on this candle right here, we have the green cloud, we have the lagging span above, and let's see about that conversion line. So it doesn't look like, bring these to front. Yeah, it doesn't look like it's actually above. So let me just pull this back one candle here and just see what it's looking like. Yeah, so conversion line not looking quite there yet on that candle. So we're actually still just going to wait. Okay, so it actually just right after, looks like on this candle right here is our long signal. So you actually got a better long entry. So let's take that long. Stop below the cloud. Targeting 2 times the risk. And let's speed it up here. Okay, so that's a good one. Let's move on to the next one. All right, so the last example here will be a short, and let's start out the bar replay. So we got to close under the cloud now, but there's no red cloud. We don't have the lagging span anywhere near, and so we're just waiting. So it looks like we got a cross on that cloud now, but we're still waiting for the lagging span over there. And it was a good thing that we had to wait for the lagging span because big pullback. Looks like we just are about to get a lagging span cross down. So just right here on, looks like it was actually this candle right here. Let me just pull it back. Yeah. Okay, so this was the candle that gave it to us. So we're going to enter short on that candle. Everything else is present. Looks like the conversion line has just crossed back below the baseline as well. Red cloud. Yeah, so we're good. Stop loss is close on this one, so we'll see if it is safe. Again, you can find another way to better use the stop loss, or better do the stop loss with a ATR method or some other method. And that one is good. So that's the final example. I hope it all makes sense. I mean, I'll list the rules out simply. You're waiting for that close over the cloud or under the cloud. You're waiting for that cloud to shift. The most recent cloud needs to shift in the same color of the direction you're taking the trade. You need to make sure that the conversion line has crossed above or below the baseline in the direction of the trend you're taking. And you need to wait for the lagging span to cross above or below the cloud, depending on the direction of that trade that you're taking, okay? So really simple set of rules, and it's a common set of rules. It's not something I invented. It's a simple way of trading with Ichimoku, and I just thought I'd do it on the bar replay feature and show a bunch of examples if it's never really made sense to you in the past. Hopefully it did now. If you like this video or appreciated it, make sure to like the video and subscribe to the channel. Comment down below for the YouTube algorithm. Thank you very much for watching. Appreciate you guys.